Welcome everyone, Leo Alvarenga here with GoodStory, bringing you a quick market update for the month of January 2024. So for 2024, January, we had fairly steady market. Actually, compared to 2023 at the same time, we had 16.5% more sales that occurred in the month of January, which is a good indication of where things might go once we get closer to the spring. Now, in terms of pricing, we did see an uptick in pricing from January 2023 to January 2024. We saw about 3.2% overall increase in the average price. Again, this is not every single neighborhood went up in value. This is more like an average of the entire city, so just keep that in mind. Some areas actually might have gone even higher. You know, the more desirable pockets, you might have seen an even bigger increase from early 2023. In terms of the different asset classes and where the pricing went, in case you're curious, so single family homes went up about 3.7%. Townhouses actually went down in value about 2%. And then apartment condominiums, there's not a ton of inventory, but it's just not getting absorbed as quick as possible. It seems like it's not like an extremely desirable product. However, we're starting to see people come back into the condo market. And the condo market did see an uptick in price of a few percentage points. So the only decrease that we really saw was in townhouses. And again, townhouses, we saw a crazy uptick in value throughout COVID, as a lot of you know, and that's slowly adjusting over the last couple of years. We're not gonna talk about 5-year, 10-year average because it's completely skewed by COVID. However, it's worth noting that we're definitely under the sales activity that we've seen over the past, if we were to average out the past 5 or 10 years, definitely even in January of this year, we're still seeing less activity than if you pull those averages. So just something to keep in mind, but keeping in mind that early 2021, early 2022 was extremely busy in terms of sales. I mean, the busiest in history, you can say. Something to keep an eye out, we've been talking about this in our podcast last month and a few different videos. Interest rates are the ones that are playing a huge factor here in terms of buyer confidence and the activity that we're gonna see today, tomorrow, and as we get closer to this spring and summer months. So interest rates, and not a lot of people know unless you're kind of in the market, the ones that make the headlines are typically the variable rates. The fact that the Bank of Canada has been holding the rate, the overnight rate steady, which is the one that affects the variable rates. It's been holding steady for about 3 or 4 times already. It hasn't come down, it hasn't gone up, so there's no major news there. But behind the scenes, we have the fixed rates that have been going down over the last few months, and that's having a big effect on buyer confidence. So if you were looking for a house in October of last year, you were looking at a 5-year fixed rate over 6%. Today, we're actually seeing rates sub 5%. We're back in the 4s. So that's something to keep an eye out for, right? So the Treasury in the US has indicated that they're cutting rates, if not already, and that is pushing the bond market in Canada lower. And that's what indicates, that's pretty much what the fixed rates are pegged to. So it's something to keep an eye out when you see bond rates, bond yields, 5-year bond yields coming down. You should expect fixed rates to follow. It's not an immediate thing, right? Banks will still have a certain amount of loans at the higher rate, so they won't adjust it overnight. But if you keep an eye on the bond yield, the 5-year Canadian bond yield, that's a good indicator of where the fixed rates are going. We are expecting them to keep on creeping down as we progress more into the year. And in terms of the variable rates, a lot of us have some variable mortgages as well. Those are supposed to come down mid-year sometime. Some are predicting as early as April. I think that might be a little bit too soon. It might heat the market a little bit too much, but most analysts and economists are indicating most likely sometime in mid-year, we're gonna start seeing the variable rate come down. I personally don't expect it to come down drastically because we do still have inflation. We do still have quite eager buyers. Right now, we're starting to see it actually. We are starting to see buyers with more confidence. We're starting to see multiple offers again. Are they crazy? No, don't alarm yourself. If you're on the fence, no, you can still find a house. You don't have to go 100, 200 over asking. So just keep that in mind, but we are starting to see that kind of confidence, more buyers coming to the table. Again, it's the tale of, as always, since I became a realtor in 2015, it's always been the same issue. It's inventory. It's an inventory crunch, and that's really what pushes prices up. That's what pushes inventory to be scarce. Yes, interest rates play a factor as well, but the main culprit here is inventory, and we keep on saying it. I think as we go into the summer months, something to keep an eye out for, of course, like I said, that fixed rate. Keep an eye out for the variable rate, of course. And also, you know, in your different area, your different market, take a look and see how quickly things are selling, right? And if you were on the fence on buying or selling, a conversation is worth the while. Whether you're looking at doing it in a month or in a year or two, an early conversation will always lead to a better outcome. So we're here for you. Let us know if you have any questions or comments below. Let us know what your predictions are for the coming months and for the coming year, and we'll chat soon.